Hello everyone, my name is Kenton Kavestu. I'm an ex-BCG consultant, an ex-Googler, and the founder of RocketBlocks, an online platform that helps candidates prepare for interviews. In today's RocketBlocks video, we're going to do our second in our concept review series, and we're going to talk about the concept of relative market share, which is a way that you can analyze a company's position within the market it operates. And it's a really good thing to look at because it comes up frequently in case interviews themselves, along with charts, especially in Bain interviews, because they really popularized this approach and they like looking at companies within markets in this fashion. So let's go ahead and jump in. Let's start by defining relative market share. Basically, this is a way to assess a brand or a product or a company's position in the market relative to its peer set. And it's pretty easy to calculate. You basically only need to know two simple equations. The first equation is for calculating the market leader's RMS. And to do that, you need to know the market leader's own market share, and then you need to know the next biggest company's market share as well. So for example, if the market leader's market share was say 40% in a given market, and the next biggest competitor had a 30% market share, then the RMS for the market leader itself would be 1.33, which is just 40% divided by 30%. So that's how you calculate the market leader's RMS. Now let's talk about how you calculate the RMS for everyone else. So this is the second equation you need to know, and this one is also pretty simple. The numerator here is the company's market share, that the company in question that we're calculating their RMS, and then the denominator is the market leader's market share. So let's use the same company we were just talking about in the last one, the company that has a 30% market share in this market, and we know that the market leader, because we already talked about them, has a 40% market share. So the RMS for this particular company would be 0.75. And you can do this for then every other company you want to look at in this particular market on down the line. So once you've got all those data points, what's really helpful is you can put them into a visual display. And this is often how you will see relative market shares displayed. So let's take a moment to just digest what we've got here. On the x-axis, we have relative market share. So those are the values we were just calculating. And then on the y-axis, we have return on assets, which is a measure on profitability. You could also use something like profit margin here. The key is you want some sort of profitability measure on the y-axis because you want to understand the relationship between those two variables. Then the third thing we have on this graph is there is a z-axis, which is the actual size of the bubble itself. And that means that the bigger the bubble is for a particular company, the bigger their annual sales are. So for example, if we take this company in the upper right here, let's call this company A. This company has a RMS of, that's like around 1.2, and they've got a return on assets, it looks like, of about 7% roughly, and then we know that they do about 8.7 billion in annual sales. So that's how you can actually read a relative market share chart. Now let's take a step back, and now that we understand how to read the specific data points on the chart, look at some of kind of the key trends that we're seeing in this particular chart. So let's clear our chart and look at it. And the big thing to notice is there is this pretty clear diagonal strip through your chart, where as you're moving to the right, things on the chart are also going upward. So that means basically as your relative market share gets bigger out to this side, the profit margin, the return on assets that these companies are making are also going up. There's a strong positive correlation between these two things. And if you were to think about a market with kind of perfect economic theory where economies of scale really kick in, this might be what you see. Whereas a company gets bigger and bigger, they gain more and more market share, they're able to produce, say, the widgets they're making at a cheaper and cheaper rate, but sell them into the market for, a price or maybe even a premium price if they build up a brand. That's kind of what you're seeing illustrated on this chart, where the bigger a company gets, the more profitability they enjoy as well. And that's what drives this kind of nice positive correlation you're seeing in this particular chart. Now, this is not always going to be the case. In fact, in the real world, the examples probably aren't as neat as what we're looking at here. So you might actually see something that looks more like this. So we've got relative market shares mapped out here as well. And let's kind of walk through and see what these relative market shares are telling us about this particular market that we're looking at. So let's start by looking at this company here in the upper right. Let's call it Company A. And we see that they, again, they are in this zone up here where they have both a high relative market share. They're the market leader in terms of share, and they've got a pretty good return on assets. But we also see that on the other end of the spectrum here, there's a few companies that from an RMS perspective are actually quite small. They have a 0.2 relative market share. But if we look at the return on assets they are earning, in particular this company, that's quite good, 8%. So they are succeeding from a profitability standpoint despite being relatively small in the overall marketplace. They're a niche player that is succeeding. And in the real world, you probably actually do see a mix of this. Often where companies sometimes get into trouble is in this area in the middle here, where they're kind of neither here nor there. They're not the major player in the market, nor are they a small niche player. And they enjoy kind of, middling return on assets or profitability. So they're not quite picking a strategy that's really working for them in terms of their market share and how it relates to profitability. Okay, so one final thought I want to leave you with when you're thinking about relative market share and studying one of these charts. It's really easy to get caught up in all the details. What are the sizes of the bubbles? Where is each of them on the relative market share x-axis? All of these kind of details, but don't lose the forest through the trees. Ultimately, relative market share and these charts are a way to understand whether market share and gaining more market share in a particular industry is going to lead to outsized profits and a company's ability to generate cash. That is really the key point of looking at something like these charts. So thank you again for watching. We have a ton of great content coming out on the RocketBlocks channel on a weekly basis. So if you haven't subscribed yet already, please do so below. There is a big red button there. And thanks again for watching. We'll see you next time.